The number one mistake I see homeowners make is not using the equity in their home to improve their financial situation. One of the best ways to access the equity in your home is by using a home equity line of credit, also known as a HELOC. Need a crash course on what a HELOC is? Think of it like this. Your home is a piggy bank, and the home equity line of credit allows you to get in and take the money out of the piggy bank. To give you some real numbers, if your home is worth $400,000 and you had a $250,000 mortgage on the property, the equity or the difference between those numbers would be $150,000. So what the home equity line of credit allows you to do is get to a portion of that $150,000. Now that you have a better understanding of how you're going to access the equity in your home, now you might be saying, well, give me some examples of what I would use that money for. So home improvements would be one of the main reasons people want to tap into that equity. This could be to fix a leaky roof, upgrade a kitchen or bath, or whatever you want to do to improve the home. Think about it. You get to live in those nicer, improved conditions while you're increasing the value of your home. Another common use of a home equity line of credit would be college tuition. Now, this could be for you going back to school, or maybe you have children that are wanting to go to college. This can offset the tuition, the room and board, the books, the computer costs, you get it. Another example would be debt consolidation, or just getting cash out so you can pay off your debts. This is a big one, especially currently, because the interest rate on credit card debt is so high. So what people do is they pay off high interest credit card debt with the equity in their mortgage. So basically restructuring that debt to a lower interest rate, ultimately creating a better cash flow situation with their own expenses. Another great example would be to get to that equity so you can reinvest it and make your money work harder for you, make that money grow faster than just sitting in your home and growing at 4 or 5%. Common investments would be reinvesting it into maybe a rental property or a fix and flip type of situation. But there's all sorts of other opportunities. It could be opening up your own business or investing in other things that are going to yield you a good return on that money. And one of the final uses of a home equity line that's common but not often thought of is using it for an emergency fund. Maybe you don't need access to that money to do anything at this moment, but you just want to have that safety net. You know, life can throw us all curveballs, and if you don't have the home equity line put in place, if you do want to get to that equity, it can take, weeks or even up to a month or two to get that line put in place. So people like to use it almost like an insurance policy. In the event something happens, you have checkbook authority to write a check from your line of credit to pay off those emergency expenses. Oh, and there's one more thing I almost forgot to mention. If you really need to get to that equity, let's say you lost your job or you got injured on the job and you can't work, the time that you really need to get to that home equity line, if it's not put in place, the banks won't give it to you because they're focused on your ability to repay that debt. And if you're not working, you can't prove that you can pay it back and they won't do it for you. So the key is get that line put in place now, because if you want to access it, or when you do write a check, you're not going through the underwriting process again. You're actually, like I said, have checkbook authority and you're able to write that check to pay off expenses, your mortgage, medical bills, whatever it may be. So it truly is that insurance policy that can help you sleep good at night.